The Morning Drive is sponsored by Power Metallic. To find out more about the company, please visit their website at powermetallic.com. Follow the Money Investor Group is a 100% Indigenous-owned company and certified with the Canadian Council for Aboriginal Business.
Warwick Smith.
Good to see you, man.
Good to see you.
Yeah.
I don't know. I remember seeing you back in the Minus Letter days.
Yes. Oh my gosh.
You were doing interviews with him, right? With James?
That's right. With James. Yeah.
Right.
I haven't seen him in it's years now.
Yeah.
Yeah.
So you are the CEO, probably director too.
Correct.
Of American Pacific.
Yes.
And I'm going to drive you into work today.
Sounds great. I love it.
And technically, it is the morning. So
it is. Yeah.
It's getting close to the afternoon, but it's
Yeah. We're still there.
So our audience, our communities, I have probably, some of them maybe have heard of your company.
Yep.
But maybe, we'll get a bit of an overview. But I do want to remind our audience here, go in the description of this video because I'm going to be doing an X space with Warwick. He might not even know that yet. Did you know that?
I did actually.
All right.
Yeah.
So we're going to be doing an X space, which is typically more of a deep dive, and maybe we'll get some other people on from the company to go over the projects or whatever, if it's possible. But you're going to get to know him. You're going to get a feel for Warwick today, and we'll do a bit of an overview of the company. Sound good?
Sounds great, man.
All right.
Great.
So maybe before we get into the company, let's talk about, where did you grow up?
I grew up in Vancouver, North Vancouver. So we're in Richmond right now, which is relatively close to the airport. I grew up on the other side, pretty close to the mountains, out that way. My parents immigrated here from England, and born and raised.
Nice.
Yeah.
Were you, you got siblings?
I have 3 half-sisters who are a few years older than me. I actually just went to my sister's birthday. She turned 70 last weekend in Penticton, which is close to where you're headed after this, up in the Okanagan.
Yeah.
So, yeah.
All right. So, wow, what's it like having 3 sisters, man?
It's good. It's it's different because there's a decent age gap there of 20 plus years. My dad was married before he had 3 daughters, and then met my mom, got married, and had me. So there's a pretty good age gap there. But they took great care of me as a kid, and I got the advantages of that, right? They would take me out and take me camping and all those type of things.
And they get to vet all the women that have come through. Right or left here? Sorry.
You're going to go right here, and then you're going to go left on the lights. Okay. Yeah, you got it.
So they get the vet. You get like.
Yeah. They've had opinions on people along the way, for sure.
Yeah.
For sure. Yeah.
It's human nature.
Yeah, that's it. It's nice. I get to give them my opinions now too. So. And then they got nieces and nephews through them. So now I've got to repay the favor a little bit, and, look out for them, right?
Did you play sports at all, or?
Played basketball, not at any sort of a high level. One of my business partners, I did an interview with him, funnily enough, and we got chatting basketball, and he played at a pretty high level. I think he was ranked 3rd in BC or something. It was really good, but he's also about a foot taller than me, so he had that advantage.
Helps,
And then later in life, it's been just distance stuff. Done marathons. I'm presently training to do a half Ironman in December. So,
oh, nice.
Yeah.
That's what they do out here in December, eh?
Well, I'm going to do mine in California, but I've started training, but the bulk of the training will be October, November, which will be all out here. So a lot of running in the rain, unfortunately.
Would you say that you're a competitive guy?
Yeah, highly.
Yeah. That's a trend with executives.
Yeah, it's funny. I'm not super, I would say this, I'm definitely competitive. I don't like losing. Obviously love to win. But I don't feel super competitive in that, in the way where we're competing for capital or we're against other companies in the space. Yeah, because all these guys and girls, right? And quite frankly, this is a smaller space, and if XYZ company has a big discovery and their shareholders make a lot of money, that's good for everybody.
Yeah.
That's good for all of us, right? Well, that's it, right? And that money usually flows back into the space. So I don't feel competitive in that nature. But yeah, in general, I'm pretty competitive.
Okay.
I like to think.
College, what would you do in school? Like, where did you go to school?
Yeah, funnily enough, so my dad was the general manager of the Vancouver club. And that I followed that pathway initially. I actually went into hospitality management of all things, thinking I was going to run hotels and restaurants. Wasn't for me at all. Ended up going back, went to BCIT, which is a college out here. Took sales and marketing, was the best thing I ever did. More than anything, it just taught you how to work. It was a very heavy course load.
Yeah.
And at the end of it, for a young guy who needed work, all these companies would show up, they did a job fair. And that's really kind of how I fell into the business. That was really the start of it for me.
And so what was how did you get into mining? What was...
Yeah, it's funny. There was a company called Stockscape, kind of a predecessor to Stockhouse, or a competitor to Stockhouse at the time. And this is going back to 1999, I believe.
So
early days.
Tech.
End of the tech boom, $300 gold. I remember $400 gold being a big thing. Happened on Brian Lundine's birthday. I remember emailing him saying happy birthday, and we all got what we were looking for. It was quite funny thinking of where it is now.
Yeah.
But yeah, we did essentially like internet promotions for mining companies. Worked with the guy there who helped me out quite a bit early in my career. Learned a lot from him, and then he was doing sales, and I was basically renting lists and getting investor lists and what have you, and building up that side of the business, understanding the creative, what worked and what didn't. So it's as the career went on and did other things, it just gave me a good background on the digital side as to what we like,
sure,
what works, and now it's gone a long way since then.
Well, and back in the day, like what was really working for marketing? I can learn something here.
No, I mean, like for us and for what we did, we worked with a lot of the newsletter writers. I think back then the newsletter writer community held an enormous amount of power, and for us it was going in, working with them, but being able to build their subscriber base. So we'd take a newsletter writer who was, let's say, covering American Pacific. American Pacific would want to do some promotional stuff. We'd turn to the newsletter writer and say, okay, let us use your creatives, and then we'll give you a copy of the leads we get as well. You can turn those into subscribers.
Mm-hmm.
So they loved it.
Yeah.
Companies spending money, they're getting new leads, they're converting those into subscribers. And then when things got good, 04, 05, 06, it worked really well. And then by that point, I kind of branched out on my own. I was doing investor relations, and I knew a lot of the newsletter guys at that point. So developed good relationships with them. We had some companies that did really well, which always helps. And then I started building relationships with the different television stations.
Yeah.
So at that time, Rob TV, which is now BNN Bloomberg.
Yeah.
Built a relationship with Fox. Built a relationship with CNBC for some time, and then I'd be able to get these guys here and there on the shows.
Mm-hmm.
So they'd always take my call.
Yeah.
They'd lend an ear. So
Sure.
it worked well.
Okay.
Yeah.
And then, what was the first issuer? Who was the first issuer that you worked with?
First issuer I worked with was National Gold.
Okay.
It was taken over by Alamos. They owned, the name of the project's going to elude me.
Straight here?
Yep, you're going to go straight here. Yep. Yeah, we're going to go straight for a little bit and then jump on a bridge and keep going. Yeah, got merged with Alamos. I wasn't there all that long. Then did investor relations for a few different companies, but landed very quickly with Simon Ridgway's group of companies called the Gold Group.
Yeah.
And I was kind of in and out of that office for 10 to 12 years. Learned a ton.
Yeah.
Learned a ton. It was a really good experience for me. We had some great successes. The companies did well. Fortuna Silver was a shell. That was the company I came in to work for when it was a shell.
Right.
And it obviously did really well. And credit to Jorge and the team there. They've done a phenomenal job. So that did really well. And then we had a company called Northland Resources that we spent 2 years, myself and Ralph Rushton, who worked there. We spent about 2 years kind of going around Canada and the US raising money at 30 cents. Did a couple, I think 2 or 3 financings at 30 cents. And then a group out of Oslo got involved very quickly from the first phone call to, I'd say, 3 months later, we raised money at 90 cents. And then it was 3 to 6 months after that, we raised $186 million at $5.60 with that same group. Listed it over in Oslo. It was a big success.
Yeah.
So, you know, credit to that team as well. They did a phenomenal job with it. And then 2008 hit, so then that was, you know, a struggle. But yeah, those were fun days.
So let's go now into the company that you're with now.
Yes.
How did this opportunity come about, and why did you get involved in it?
Yeah, I mean, I'd taken some time off of mining, done some different things. And it was my mom, who's since passed away, had said to me, hey, you know, you had great friends in mining and you always really enjoyed it. You know, why don't you consider going back to mining? And I'd always kept in touch with Eric Saderholm, who was my partner at American Pacific. We had a great relationship from before, and you know, we got chatting about it. We looked at a few different assets. I met with Ken Cunningham, who was on the board. Ken had run Miranda Gold for a long time, and you know, it's just kind of a mentor for me. He's the elder statesman on the board now. Somebody that's always sort of felt like he had my best interest at heart. And we met at the Rick Rule conference in Vancouver. Had a glass of wine, and I said, "Yeah, thinking about coming back." And he said, "Well, if you do, like, I'll join the board. Like, I'd work with you in a heartbeat." And so those things kind of pushed me towards it. And then a friend showed us an asset that was in Nevada at the time that we really liked. It was close to home for Eric. Eric loved the asset. And it's grown from there. I mean, that was March of 2018, 7 years ago. So that was the precipice to start. And then from there, it's been finding interesting assets, and you know, we've done lots of things to be self-critical on, but we've done some, you know, I'd reference them as pretty cool transactions along the way.
Yeah.
Yeah.
So I was watching an interview with you on the plane that I saved, and I know that, you know, the increase in copper and gold price it's not good enough for you, Warwick.
Okay.
And I know that, and I understand, because if people aren't willing to risk their money,
Yeah.
it's not irrelevant, but it's just not going to give you that instant gratification.
You're right.
Like, oh, gold went up today. I mean, certain things go up with it, but what is going to create a risk on appetite?
Yeah.
That's a hard question to answer. But
No.
I mean, I got to ask you.
No, but it's a great question to answer. I've said this for a few years, you know, the gold price, the copper price, the silver price, everything is raised pretty dramatically from the lows, right?
Yeah.
And like, I would say, like, I'm cautiously optimistic we're starting to see it now, right? You're getting that risk on appetite. If you look back to 2021, it became risk on, right? Where when you're risk on, all boats float in small cap. It doesn't matter if you're in tech, biotech, mining, whatever it is. If you're doing things right, you can create excitement. And we saw that in 2021. It feels that way, at least for me, the early stages of that now, where you're seeing a lot of these companies starting to get the lift that we all think that they deserve, right?
Yeah.
So, look, I think Trump's done a good job of coming in and kind of like, he did a great job in that first term, creating that opinion that no matter what was happening, he would tell you how great everything was. And scarily enough, that can work. We saw that work in his first 4 years, and I think we're seeing that work a bit now. When you delve into the numbers, you can be more concerned, there's no doubt, right?
Yeah.
But he's doing a better job of that again than, say, the Biden administration or what have you, right? Where they were potentially more realistic in the way they were looking at things, right?
Yeah.
But you're seeing now this lift. You know, long may it stay. It's one of my biggest holdings between myself, my wife, and my family. We probably got exposure to 5.5, 6 million shares of the company, which is quite a bit for me.
Yeah. Right here.
Yep, you're gonna go here. Yeah. Percentage-wise, it's not that high in that the company's grown. It's got 219 million shares out. It's a larger market cap from the, I think when we took it public, it was a $5-6 million market cap.
Yeah.
So it's grown over time. We've taken part in every financing to the tune of $50,000 to $100,000 every time. So we continue to put money into it. And, you know, I bought some last week when it was coming off, and bought a bit more to show support and
Sure.
stay in the game.
The assets, these are North American assets. Are they all U.S. based, or are they?
All U.S. based, yeah. We focused on high-grade assets in the Western U.S. Even Alaska was a bit of a departure, but at the time it was too good of an opportunity to pass up. So, asset down in Montana called Madison, high-grade skarn at surface with a porphyry underneath, past producer, carries tremendously high grades. Created a lot of excitement for the company over the course of time. Talk about being risk on in 2021. Madison was the lead asset. Mike Gentile came in as the major investor. We were the #1 performing gold stock globally, as ranked by the Wall Street Journal Mining Index that year. So it's an asset that can certainly capture the market's attention.
Sure.
Up in Alaska, 4.7 million ton VMS indicated, another 12 million tons inferred, about 3.5% copper equivalent. We think it can get an awful lot bigger. Again, high grade. Credit to the team up there. When we came in, drilled it. We drilled the 4 best drill holes, copper drill holes, ever drilled on the project. 24 meters of over 9% copper, 11% copper equivalent. 43 meters of, I think it was 8% copper, about 9.5% copper equivalent. Really, cracker high grades in the core of it. So, yeah, exciting project as well. And then a fleet of projects down in Nevada as well.
Okay.
Yeah.
Any other strategic shareholders? Like you mentioned Gentile.
Yeah, so Mike Gentile owns 14% of the company. Last financing we did, Broma Asset Management, so the Lundins came in. ASA Merck was on the previous financing, Ixios, Palos, so a bunch of different institutions own the story.
And what percentage do you think retail would own it?
There is a strong retail component to it. Again, it's one of these, but I'd say roughly 60%.
Okay.
Yeah, it's a
good mix.
It's a good mix, yeah. The U.S. holding on the retail side is significant. At one point we bumped over that 50% threshold, which can end up being an issue. But thankfully we were taking over another company at the time. We were all Canadians, which brought us back on side. It has a big U.S. following.
Relative to its peers, how would you say the liquidity is?
The liquidity is good. I would say, again, without looking at Stockwatch in front of me, probably trades 300 to 350,000 shares a day. Okay. It's very liquid, both in Canada and the U.S. That year in 2021, traded over $100 million just on the CSE and significantly more down in the U.S. as well. Okay. So it gets very good liquidity.
Yeah, especially relative to your peers. For sure.
Relative to the peers, for sure. Yeah. It's a.
And you can have great projects and not see the good liquidity. So what do you think is the reason for that?
You can absolutely have great projects and not see liquidity. It's actually been one of the things that we've thrived on in terms of. We're going to talk about getting to this more risk-on market. When we weren't there, I mean, there was lots of companies out there that had great assets but weren't getting the joy. And then it allowed us to go and purchase those assets, right? So Alaska being a great example of that. The Montana is a bit of a different story, but somewhat similar. They switched from being a mining company to focused on, it actually became MineMed.
Okay.
So the mining asset was available, and we were able to pick that off at the time for a $2.6 million valuation in stock, which was a coup for us. We got nominated for that deal by S&P Global Platts for Deal of the Year.
Nice.
We didn't win it, so Cleveland Cliffs won that year, but they did.
Nominated is great too.
Yeah, it was good. I wanted to win, of course, but that's the competitive piece. But
how many people do you think get nominated?
There was 4 of us who got nominated.
It's a small group.
Yeah, it's a small group. It's a small group. Yeah. It was actually that was an enjoyable time. We got nominated twice. And the second time we went to the awards ceremony, which was held in London. It's a big black tie event, and it was quite something. We got nominated for 5 awards that year. It was enjoyable.
Going to remind the audience now again that go in the description of the video and sign up for the X Space that I'll be doing with Warwick. That'll be more of a deep dive on the projects and potential upside. Right now is do a bit of an overview, but get a good feel for work. If you're at an investment conference, right, you're a busy guy, you're going to have meetings, blah, 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 blah. If there's one name as a guest speaker, one name that would be like, you know what, I don't want to miss that. Who is it?
Oh, that's such a great question. He rarely does them, but Mike Gentile, I mean, that's a hometown answer, I guess, a little bit, but Mike's really good. Peter Grandage very rarely does them. He's been spot on about a lot of things. Chen Lin.
Oh yeah, he's good.
Chen Lin.
He's a newsletter writer.
Newsletter writer.
Yeah.
Does a lot of the Metals Investors Forum.
Yeah.
Conferences.
Yeah.
Speaks elsewhere as well. I think he spoke at PDAC. Really interesting. He just has he's got a lot of mainland China subscribers.
Yeah.
And he will reference a lot of data from China, so it's just kind of a different perspective.
It is.
I
find him kind of funny too.
No, he is. He's a great guy. Actually, I have a lot of time for Chen. We get along well. But yeah, I really actually of everybody to sit down and listen to.
Yeah.
Because it's going to give you something unique.
Sure.
You know, I think that's worthwhile.
Yeah, he always gets my attention.
Yeah.
And I'll give a shout out to Mr. Gentile because I got an email from him a couple months ago. He's a big fan of the Morning Drive.
Oh, I didn't realize that.
Yeah,
There you go. He doesn't do a lot of conferences. I know he did that one out in Quebec in the summertime.
Yeah.
That's
That's around the time I heard from him.
Okay, that's good.
Yeah.
Yeah. So if you catch him to get him on here, he's I mean, you can have big shareholders that you don't like very much.
Yeah.
I mean, it happens.
Yeah.
I can assure you. I'm not going to name them, but it can happen. But no, I like Mike. Michael is unique in that he will get with stories and stick with them. He's incredibly helpful, opened a lot of doors for me,
Yeah.
particularly early on in American Pacific. And even when we've disagreed on things,
Yeah.
because there's been moments where we haven't seen things the same way, we'll be able to debate. He's incredibly respectful,
Yeah.
which is nice, because you can, as I say, you can get the opposite.
Yeah.
I got a lot of time for him. He's a good human being too.
When it comes to conferences,
Yes.
can you tell me what your favorite conferences? Maybe you can shout out a few
Yeah. No, I'm happy to.
that maybe people watching this should attend if they can.
Yeah.
Not all of them you're going to be able to attend. But
No. That's fair. Yeah. We do some different ones. So I think as an entrepreneur, it's smart for you to try to find different audiences.
Yeah.
The one-to-one conferences are great.
Yeah.
Friendly with the people who run the one-to-one conferences. They do a really good job.
Okay.
They'll take you around the world. So you're kind of getting different looks.
Yeah.
I like that. The guys who run CEM.
Capital Events Management.
Yeah, they've been excellent. So we did their show in the Bahamas last year. It was the very first time they brought mining companies. It was predominantly tech before, but they brought a dozen mining companies. We were one of them. And then their show down in Scottsdale, Arizona. Those two shows were fantastic for us. We work very closely with Echelon, which is now Ventum, and myself and my two partners were in Montreal at one of those capital events conferences, and we met one of our closest contacts. Literally under the stairs at a F1, because that was what they were doing afterwards.
No way.
It's a lady out of Toronto, and between all the files, I would think we're probably bumping up towards $100 million we've raised with them over the course of the last 2 years.
Wow.
And that was through one of their conferences. So
There's value.
There's huge value. There's huge value. It's going to them and A, having the right product, B, taking the meetings, but going out and doing your best. They do a very good job. One-to-one does as well of doing these social events.
Yeah.
As well.
Yeah.
So taking the time to attend those and just being open to chat with people, and you know, it's
So,
worked
like,
really well.
In person, you really like that. You love, right? Like in-person stuff.
In person instead of like online.
Like virtual. Like webinars are great because we got onto those pretty early in COVID, and it was
Yeah.
successful. We grew our email list.
Yes.
But I feel like we're getting webinared out there right now.
Yeah, I tend to agree. Eric and I joke about COVID. We did like 1,000 Zoom calls during COVID. It was unbelievable.
Yeah.
Look, I think there's a place for it. I would say like video content, things like this. You know, we can shoot this, and you know, a couple thousand people are going to see it, right? Yeah. That's pretty good for a ride into work, right? Like that works really well.
It's a productive ride in.
It's a productive. It's more
It's
productive
not the
than most
cheapest
rides.
ride in, but
No, but
Yeah.
money well spent, right?
Yeah,
Like.
yeah.
We know your guy. We know you. Like, I've known you a long time. I know you've got a good following. I know you've got a credible following, right?
Yeah.
So if I can engage with those people, and there's people that find that, you know, what we're saying of interest, that's really worthwhile.
Yeah.
So I like video content. We've focused a lot on video and pushing it out through socials and what have you. Working with newsletter writers and people with followings where we push out our content. I think that makes a lot of sense. You're kind of marketing more like a tech company than a mining company in a lot of ways.
Yeah.
I think that's a good way to differentiate yourself as a company. So I like that. The sit-down webinars where you're inviting people to come in and meet with you and what have you. Yeah, I think you're better in person.
Yeah, for sure.
There's a home for them.
Yeah.
You know what I mean?
Yeah,
You can get a
yeah.
lot of people in.
Yeah,
You know,
I think there's always going to be like it's definitely a new value add.
Yeah.
But it's also, you know, the in-person thing is like just listening to some of your stories. I mean, those are really good. That's always going to be there.
You know, and we've gotten away from doing conferences where you're kind of sitting and waiting for people to show up, right? And there's a lot of those, and you know, and just because this is what works for us doesn't mean it doesn't work for others, right? But I like these ones where you have targeted meetings. You're sitting and you're like engaging with people. You know who you're meeting. You can kind of vet them in advance and have an idea of what people are looking for. Right. That works well. And then the things that we do for like, so PDAC, right? We go to PDAC, we don't get a booth, but we always throw an event.
Yeah.
And so we'll split it with a couple of companies.
Yeah.
And we invite everybody that we want to come.
Sure.
You know, we'll end up having, you know, 500 to 700 people come through.
That's substantial.
Have a drink, chat, see people, that touch and feel where everyone's having a good time, and you know, like,
Yeah.
people remember that.
Yeah.
And it makes it very easy to follow up. I'll be back in Toronto in a week. Let's get together and let's talk about, like,
Yeah.
that's been really effective for us.
It's kind of like your first touch that year.
Well, that's it. Yeah, I mean, it feels that way in a lot of cases, right? You got VRIC here in January, and then you got PDAC in March, and they can be kind of first touch points where you're, you know, getting back and seeing people and getting in front of them, right?
So, you know, even though we're not talking too much about your projects right now, I think that this is a good piece of content for your existing shareholders and also our audiences, because we're talking about how you're marketing your story. And we've already established that you've got liquidity, so you do things right on this front. And if I'm a potential new shareholder, you know, liquidity is your best friend.
Yeah, absolutely.
Right? So you're kind of, you know, he knows what's up. That's for sure.
Well, look, I appreciate that. There's lots of things to be critical on. I mean, but I enjoy doing these things where you can kind of, you know, I can talk the project all day long as well, but it probably is nice for people to just kind of hear your voice and get a feel for who you are.
I think so. I mean, some people didn't know you had 3 sisters.
Well, yeah, no, I'm sure. Yeah, that's true enough. That's true enough.
Well, what's your lead project? What's your number one project that maybe, you know, is the standalone? Or maybe not a standalone.
Yeah, I mean,
how would you articulate it?
One of the funny parts with American Pacific is there's really 2 standalones. I'm not copying on that answer, but this is something we're going through, where Madison can very easily be a lead project. It's got that real high-grade sex and sizzle at surface. It's got this opportunity underneath with this porphyry, and we've done a lot of pre-work on the porphyry target. And drilling into that could be ultimately a big game changer. Think Hercules, right? They had 300 holes close to surface, sunk that deep hole, hit the porphyry, and it goes from a $30 million market cap to a $300 million market cap overnight, and Barrick comes in. Madison's got that shot. It's got that excitement, while it continues to give joy at surface. Love that project.
And I love how you marketed that right there. You know, you're comparing it to Hercules, right?
Yeah.
So it gives a potential new investor to go, right now you can go over and look at that company and see what Warwick's talking about.
Well, no, I think it works well, and I wouldn't do it if I didn't geologically. It's always like,
It's deserving.
yeah, it's deserving. It's without doubt deserving. Like all the work that Eric and Corbin and Zach had done, the two Ben's, our 3D modelers, have done to put together this. First time anybody's ever done a geochemical 3D model on Madison to really show which way it's vectoring. It's exciting, and it's got that opportunity. We're going to go and drill that here in short order. It's it's definitely exciting. And you know, Hercules did incredibly well, continues to do incredibly well. So again, like in no way competitive. They're ahead of the game with us. They've already hit it.
Yeah.
But they've expanded that out, that Idaho belt. It's it's a compelling story. And so now we need to go and drill it and show that, you know, in an ideal world, we've got the same thing. So that's Madison. Alaska is the most advanced asset, for sure.
Okay.
Right? Combined, it's a 16.9 million ton VMS. It's good at high grades. We have talked about wanting to transact on it. And I think that's likely the best move for us. We are transactional by nature. We've probably done, you know, more transactions than most junior companies have.
Yeah.
But we've grown a lot that way, and I think that's one of the things that we do really well. And so I think there's a way to transact on the Alaskan piece that'll be really beneficial for shareholders. So we'll keep working on that.
What percentage of both projects do you own?
100.
100%. Okay.
We own 100% of all the projects we have now.
Okay.
Yeah.
Was it always like that, or?
No, we went through a phase where we had Madison. When we first purchased Madison, it had a partnership on it. A partner pulled out 2 years ago. They were an awesome partner. Really enjoyed working with them. Big company. They had a switch at the head of their U.S. exploration, and budgets went elsewhere. And so they actually had said to us at the time, we're not going to drill this again this year. If you want to take it back, you can take it back and drill it, or can wait and see what happens next year. And we made the decision to take it back. They were awesome to work with. Would work with them again in a heartbeat. And then up in Alaska, we were partnered with, it's the largest smelter out of Japan. So it does about $2 billion a year in revenue. And they were just after the zinc concentrate. So from the moment we did that transaction where we bought the minority percentage, we were trying to rejig the deal and find a way to make it make sense. When we went to buy it, it was a totally different market. Our initial plan was to go do a $20, $30 million financing, drill it aggressively ourselves, and earn percentage back. That was the game plan. In the time it took to do the transaction, which was 8 or 9 months, the market went from frothy to painful.
Right.
And it didn't make sense to go raise the money. So they were spending aggressively. 25 million the first year, 20 plus million the second year, and we were getting diluted. And we could kind of see it coming. So from almost virtually from the time we got it, we were trying to rejig the deal. And then in the end, we transacted on it, so they got what they wanted, which was ultimately they wanted access to that zinc concentrate. So now they've got the opportunity when it goes to production, they get kind of this first right on 50% of the zinc con.
Right.
We got the project, and they paid us $10 million US.
Okay. So you're happy with that?
Yeah, I mean, last year we took in, call it $18 million Canadian, and I think we took like sub 8% dilution.
Okay.
So those numbers work.
Right.
Yeah. That was good math for us.
I'd like to maybe not talk about the projects anymore. We'll leave that for the X space.
Yeah, it sounds good.
Again, go into the description below, sign up, add it to your calendar. That'll be a lot of fun. Let's maybe end it here because I know we're getting closer to our destination.
Sounds good.
Let's end it on red flags with work. I've never done this before, but I was just thinking about it.
Red flags.
Yeah, you've been around mining in the markets for a while. So, you know, if you're in it from an investor's perspective.
Oh, yeah,
right?
sure.
And, you know, you're looking at deals or someone says, hey, check this out, whatever. What are your red flags?
I mean, I've got a lot. I deploy a lot of capital in this space. I deploy it with people that I know, first and foremost.
So,
People that I've known for a long time and that I trust. And that's both when just passively deploying my capital, or if we're gonna deploy capital to put something new together. I've learned the hard way that people always say what you want to hear before they get the money.
Yeah.
And there's been too many times where we've put checks into things, and then as soon as the guys get the capital,
Doesn't happen.
it just doesn't happen the way. So having a good, long-standing relationship, even that can go wrong. We had this 2 years ago where we transacted with these guys, so I thought I knew really well, and ended in frustration. So it does, you know, knowing where your capital is going is a big piece.
So
Management's huge.
Okay.
Management is huge.
Yeah, I would put that one above projects.
100%.
Because if you don't know what you're doing, right?
Yeah.
If you don't got the right people behind the helm.
No, I mean, great projects don't know who own them, right? There's that piece, right? Yeah. So, and we've seen a lot of this over the course of time where, you know, we've done numerous M&A pieces, but we've reviewed. Okay, so it's 2025. It's August. Oh, I'd say we've aggressively reviewed 3 different projects where we tried to purchase another public company this year, and didn't come to fruition. That's how hard it is to get transactions done, right? And then to get to that level, we've easily reviewed another 25, 30. And then only 3 have gotten to that level. We haven't landed on any of them this year.
Wow.
So that's how tough it is. Greed and ego get in the way every time, right? Mm-hmm. But those are what we viewed as great projects that needed a facelift or a change of management or whatever it was, change in structure, whatever it could be. So they're out there. But management's first and foremost the key. Okay. Make sure that the guys can capitalize. They either have money or they have access to money.
Yeah.
At times, having access to money is as good as having money. That's a key piece. Jurisdictional risk. Like I'm slant towards North America, but there's other places of the world that I can find interesting. But yeah, if it starts getting a bit hairy, that's not for me either. So there's a few.
Okay.
There's a couple.
Well, we're going to end it here. It's been a good one. Again, final reminder, please go in the description of the interview and sign up for the X Space with Warwick. We'll have a date announced when we launch this video. And thank you very much.
Appreciate you, man.
Yeah, we're going to get you to your destination here, and
love it.
Hopefully it's been a nice morning drive for you.
This has been I normally have to drive it myself, so it's nice to get driven. It's great.
All right. Take care, everyone.
All right.